Hey everyone. Hey. Hey everyone. Okay, hey Baptist. Okay, let me just give me a sec. I'm trying to set up a few things and I'll come back. Sorry, I was having technical difficulties earlier. Hey everyone. Okay, can I just check if everyone can see my screen? Can everyone see my screen? Okay, cool. Everyone can see my screen, right? Okay, thank you, Baptist. Thank you, Russell. Um, okay, hi everyone. Welcome to our webinar today, right? We're doing trading strategy clinic as usual. This is our Thursday's webinar. Just give me a sec. I think someone is saying that there's echo. Just give me a sec. Okay. I'm not sure what you guys can see and what you can't see, but do let me know, okay? I hope this is better. Is this better? Okay, cool. All right. So disclaimer, you guys already know how this works. I'm gonna let you guys know just a reminder that trading margin, trading forex and CFDs, especially on margin, carries significant risk and is not suitable for all investors. So do be cautioned. Please remember that whatever I share in this webinar today is not is not trading advice, should not be construed as trading advice, and should only be taken as education only. Okay, so if you guys have any questions throughout the webinar, feel free to just drop it into the chat box. Okay, so let's meet the team. Okay, sounds a bit unstable and there's a bit echo. Let me try to fix this. Sorry guys, I'm using a different computer than what I usually use. That's why I think there's a bit of an echo. Okay, hey guys, are you guys still with me? I think I was disconnected for a while. Are you guys still with me? Sorry about that. I think I got disconnected. Just give me a sec. Okay, I think to not waste time, I'm just gonna go straight into the live charts. Can everyone see my charts? Okay, so sorry about that. Yes, I got disconnected for a while. I just got connected back because I was trying to fix the audio because I think someone was saying that it was very echoey and there was a lot of sound in the background, right? Okay, so I was trying to fix the audio and I think I accidentally turned off the internet. Okay, so let's move straight to the charts today. Do you guys have any requests you guys want me to look at? If not, hey Jacob, hey Baptist, hey Russell, hey Brian, hey Josh. So sorry for the technical difficulties. Since we moved to Zoom, it's been a little unstable. Hopefully next week will be better. Right. Yes, exactly. We used to do this on like GoToWebinar, right? We used to do this on GoToWebinar. Okay, so can you guys see, everyone can see my screen. If you guys have any requests, this is the time to drop your requests. If not, I'm just gonna choose one chart to do analysis on, and then we can just work on that. So let's do XAU USD. Okay, everyone okay with XAU USD? Oh, by the way, is my voice better now? Do I sound better now? Because earlier on, someone was saying that I was a bit muffled and echoey. Okay, I've got Baptist requesting GBP CHF. Let's do GBP CHF then. Welcome for those who just joined. Welcome. Hey, Philip. Okay, let's do CHF. Okay, because today's webinar is trading strategy clinic, what we usually do in these webinars is we try to show you guys how we usually find our analysis, right? Okay, so usually you already know how I usually find my setups, but this is more for the new people here, the daily time frame, because I want to reference information that I could possibly get on the daily time frame, right? Okay, So I'm going on the daily time frame to see if there's any relevant information I can find on the daily time frame that will help me when I'm going down to the small time frame. So just a quick or a downtrend with GBP CHF on the daily time frame. Can you guys let me know in the chat box so I know you guys are still following me? Okay, thank you, Jacob. Thank you so much. Yes. Possibly a channel. So once you identify the trend, what I usually do is I want to find out if I can see if I can fit maybe a trend line or a channel or maybe a wedge or maybe a triangle, right? So these are some of the things that I want to look out for. So right now, I do think it is possible to maybe look for a parallel channel here, right? Okay, why do I prefer using channels rather than trend line? Because when we identify a channel, we're basically narrowing down where we think price is going to go. So once that we found a channel, it means that we are biased that price is going to move within this channel, right? Okay, so I'm going to adjust the channel a bit to make it fit because a valid channel requires 2 touches at the bottom and 2 on top, okay? Okay, so 2 on top and 2 at the bottom makes a valid channel. If I don't find this, it just means that my channel is not valid and I should not be using this channel to make reference to my trade, because the whole point as a trader is to collect, well, as an analyst or a chartist, right? You have to first chart before you are able to use technical analysis to find your trade, right? Okay, so the whole point is to collect data that accurate as possible. There's no way to know if the data you are collecting is 100% accurate or not. So you as a trader, your job is just to find information that is as accurate as possible. Okay, so in this case, I do think this channel is accurate because it has 2 touches on top and 2 at the bottom. Okay, now we're going to move on to, let me get rid of that. Now we're going to move on to horizontal level. We're going to move on to horizontal level. So we're going to pull out our horizontal ray. Okay, and then we're going to highlight the nearest support and resistance. The nearest support and resistance. Okay, so there's a support right there. Okay, and there is a resistance right there. Okay, resistance is always above price and support is always below price. So one thing I noticed about the resistance is that if you pull it back a little, it might touch even more areas, which means that there is strength in this resistance. Okay, why? Because price came here 1 time, it came here 2 times, and it came here 3 times, and all 3 times it did not manage to break this resistance. So if it were to come back a 4th time, we don't expect it to break either because it didn't manage to break the last few times. So we don't expect it to break either. Okay, are we good for now? Everyone clear for now? All right. Okay, so next thing you want to do, So next thing you want to do is you have found your support resistance and your channel. What you're going to do is go down to the smaller time frame and see that if this information you have collected is even relevant to the smaller time frame. So we need to keep in mind that one, price is moving. There is a 61.8 pip level that interests me. Okay, give me a sec. I'm assuming you're talking about this 61.8. Okay. Yes, price might react off here, but we need to get confirmation from other okay. At this current point in time, I'm not going to use 61.8. I'm just going to maybe analyze things that are a bit more important. So when I look for importance, the first thing I do is look for support and resistance, followed by Fibonacci levels and trend line. Okay, so although that is a Fibonacci level, I want to first lining up here. So why, even though I pull up the 61 and price is at that 61 right now, ultimately what I want to see is I want to find a horizontal level that lines up with the 61. I know it looks like there could be a horizontal level here, right? It looks like there could be a kind of like a swing high here, right? But it's not a very significant one. Can you see that it's very messy looking? It's not very clean, right? So it makes me feel like this may not be the best horizontal level. But then again, let me go to the 4 hours to see if I can even find anything relevant. Okay, so now we're on the 4 hours. What we want to do when we're on the 4 hours is try to identify closer support and resistance. Okay, we want to identify support and resistance that are a bit closer to price right now. Okay, so there's one which is actually in line with this. I'm going to get rid of the 61.8 for now because we want to first identify support and resistance before we add in our Fib levels. Okay. Okay, cool. So there's one right. There's another support scenario, which is right here. Okay, why we are doing this is because if we're referencing that. Hi, Jacob, can you hear me now? Okay, cool. Okay. Yeah, I'm not sure what happened. I really think next week I will use a different computer. I decided to use my Mac today, and I guess my Mac doesn't work well with Zoom. I don't know. Okay, but yes, thank you for your patience, everyone. I'm so glad you guys are still staying around, even though there's a bit of technical difficulties today. Okay, yes, so we want to kind of narrow down where we think price is going because the daily support and resistance is not relevant to our 4 hour support resistance, or rather it is relevant, but it's too far away from where current price is. Okay, so we want to narrow down where we think price is going to move in the short term. Okay, so in the short term, I do see a support here. I'm going to change this to first support. Okay, I'm going to change this to second support so that we know where our nearest support and the next support subsequently from there is. Okay, I'm going to change this to first resistance and the top part to second resistance. Okay, cool. Right. Okay, now we can see that price is kind of approaching our first resistance, right? So when price approaches this first resistance, we don't know if it's going to break or if it's going to reverse from here. That's when we add in the Fibonacci levels, right? We add in the Fibonacci levels to kind of identify the strength of this support, this resistance. Okay, so for those who have not heard this analogy before, I'm gonna quickly tell you guys how it works. It's basically a man, right, pushing a ball. Okay, this is the floor. Sorry, my floor is not straight. Okay, he's walking to the left. He reaches a door. Okay, if the door is heavy, he will have a hard time pushing the door, and he has no choice but to turn back, right? Okay, if the door is light, he's gonna push the door, and then he's going to go through. Okay, so that's exactly how price is. Price is reaching a door. So a door in terms of trading is kind of like a key level. Support and resistance is key levels in trading. Sorry, I actually see an even nearer support right here, which we are going to use, and we're going to move this up, okay? Because we want to identify support resistance that is nearest to price. Okay, we want to narrow down. Okay, so all of this support resistance is considered as a door. It's considered as a door. If the door is weak or light, this person is going to have an easy time going through the door. If it's heavy, this person is going to have a hard time going through the door, and he has to reverse, right? Okay, so how do we find the strength of the door? Do you guys know? Can you guys let me know in the chat box if you still remember? Because I do see a lot of regulars here. I am very sure I would have mentioned it in all the other webinars. Do you guys remember? Yes, thank you, Jacob. Thank you, Baptiste. Okay, yeah, so we're going to use Fibonacci levels to identify the first resistance first. Why are we using why are we identifying the first resistance first? Because price is closer to the first resistance, right? So it's closer to, if we think about that human again, I'm sorry, I erased it and now I'm bringing it back again. We think about human. The first resistance is basically the door to the left, and the first support is basically the door to the right, okay? So right now he's going to the right, and he's trying to go right. Trying to go right. So right now he's closer to the first resistance. So we now want to find the strength of the first resistance first before we find the strength of the support. Okay, so how do we find the strength of first resistance? We can use Fibonacci retracement here, right? Do you guys see that? Okay, another thing we can find is Fibonacci projection. Okay, there might be a Fibonacci extension here as well. Okay, so these are the patterns that we need to identify on the charts before we can even plot Fibonacci. So the pattern kind of looks like, for Fibonacci retracement, it kind of looks like a Nike tape, right? It looks like, you know, the shoe brand Nike, it looks like that, okay? For Fibonacci retracement, it kind of looks like a V, right? But the V, the back end of the V is shorter. Okay, the back end of the V is shorter. Okay, and for Fibonacci projection, it's a zigzag pattern. It is a zigzag pattern. Okay, so now that we found our pattern on the charts, we're gonna plot those Fibonacci levels to see if anything lines up at our first resistance. So the more things lining up at the first resistance, the stronger the first resistance is, because it's kind of like when there's a door. Every time there's a Fibonacci lining up behind the door, at the first resistance, it just means that there's a 10 kilos rock behind the door. So it's going to be even harder for that person to push that door open, right? Because there's now even heavier things behind the door. So the Fibonacci levels kind of works as like a rock. I do think the 61.8% is okay. I wouldn't use this 61.8% or this 78.2%. 78.6%. Why? Because it's not very near to the first resistance. There's quite a distance from it. Okay, so again, back to that door. Technically, your first resistance is the door. If your Fibonacci level is far from your first resistance, it just means that the rock is here, right? The rock is in the middle of the room, and it's not really giving any resistance to your door, right? So it's the same as Fibonacci and horizontal support levels, support and resistance levels. Okay, so in this case, 61.8 is near to the first resistance, but it's not. I mean, there is quite a bit of distance, so I'm a bit reluctant to use it. Okay, I'm a bit reluctant to use it, but maybe we can just leave that there for now. Okay, we'll just leave this here for now to see if the other Fibonacci levels line up to it. Okay, so the other one is the Fibonacci extension. Let's see if anything lines up. Nope. Give me a sec. Okay, there is a Fibonacci extension from here to here, which is the Nike tape that lines up exactly on the first resistance. So I'm going to say this Fibonacci extension level is very good. It's very valid, and we're going to use this level. Okay. Now we're going to look for Fibonacci projection. It's from here to here to here. And we want to see if anything lines up near to our first resistance. Okay. Give me a sec. I want to see if anything else lines up. Okay, one thing I do notice that although our first resistance is here, there is quite a bit of confluence here in this area, which is exactly what Baptiste was saying, right? Baptiste was saying that the 61.8 level might be notable, and it is notable because there are 3 Fibonacci levels lining up there. So although right now there's no door, but there's 3 rocks lining up at the same area, making it quite hard for price to push up higher, right? You can see that price did come here. It broke the area and then it's kind of coming back down again. Okay, so what does this mean? It means that if we are biased for a sell, right? If we are biased for a sell, there is a high chance that price may reverse from here. Okay, price may reverse from here. Okay, so right now, I think price might reverse from here, or it might reverse from the first resistance. Okay, we are not sure yet which one. We need to let price tell us. Okay, how do we let price tell us? We see chart patterns. So right now you can see that there's a lot of reversal. There's kind of bit of uncertainty. You can see how this candlestick looks. Okay, for those who don't know candlestick patterns, I wouldn't have time to teach you today because it's a topic on its own. So what you can do is you can just Google reversal pattern candlesticks. Okay. And you can see all the different types of candlesticks, okay, which I will not be able to go through with you guys today because of the time constraint. Okay, so I do just want to highlight, let me zoom in so that you guys can see. Okay, you can see that there is quite a bit of uncertainty here. This candle right here is a uncertainty candle. This is an uncertain candle. This is some kind of reversal form of candle. This is spinning top. This is spinning top. Okay, so these are all the candles that are showing a bit of uncertainty. That means right now, price is at this area and people are uncertain if it's going to push up higher or if it's going to reverse, right? Because there may be half the traders out there who think, okay, no, it's going to reverse only at the first resistance. And there's going to be half that thinks, no, this is a strong enough area. It's going to reverse from here. Okay, so what do we do in times like this, right? I mean, usually, I actually honestly rarely take this kind of trades, but what you can do is because the general bias we have is that it is a sell, right? We have a general bias that it is a sell. So if we get in on a sell here or here, if our general bias is correct, the difference is only winning more or winning less, right? Because if you get in here and it does happen to be a sell, it means that you win, you still win, but it's less than what you would win. Okay, but if you get in at a better price, you win, but at a better price, so your profits will probably be more. Okay, so what I can tell you guys is you can consider getting in somewhere along this area. Okay, this entire area. I'm just going to highlight this entire area. There's a kind of like a 500 pips different, right? So the closer you get to first resistance, the better the entry will be. Okay, and what you want to do is you can put your stop loss. Let me just pull out the next Fibonacci levels. Okay, we've got the 138.2. Okay, you can put your stop loss just above the 138.2. Okay, so your entry is going to be this area. I can't exactly pinpoint, but I can only narrow it down to an area, right? For the sell can be here, and your entry, your stop loss will be here. Okay, and your take profit, because we now want to try to play a bigger move. Okay, I'm going to remove this, and your take profit can be the second resistance. Okay, rather I'm going to change that to first resistance, first support, sorry. Okay, so we can consider this move down. Okay, I'm not done yet. Okay, guys, do not get excited. Don't get into the trade yet. Okay, actually, don't even get into the trade unless you agree with my analysis. Okay, at the end of the day, the risk is still up to you guys. Don't get into a trade unless you agree with the analysis. Okay, so now that we found our analysis, we want to back it up with indicators. So the indicators that I usually use is actually MACD. Whoops, clicked on the wrong one, MACD. RSI, Stochastics, and Ichimoku Cloud. Okay, so these are the four that I usually use. I want to let these four tell me where price is going, right? If all four are agreeing with my analysis, it just means that my analysis is a strong one and I would consider taking it. If all four does not agree, then it just means I shouldn't get in on this trade, right? Okay, so let's look at stochastics first. Stochastics right now is at a resistance, right? It's at a resistance. That means it's at a resistance similarly with the graphical level. So since we expect price to reverse from here, from the stochastics, it would align with our graphical level. So stochastics is agreeing with our analysis. Okay, let's see what the other indicators are saying. RSI. Honestly, RSI isn't saying much, right? RSI isn't saying much. Let me see if I can just decipher what RSI is trying to tell us. Okay, nothing much to be honest. So I'm gonna get rid of RSI because it's not really saying if it's biased or if it's bullish or bearish, right? So yeah, we're not going to use RSI. We're gonna get rid of RSI. Okay, let's see what MACD is saying. Okay, MACD, how I use MACD is I kind of measure the strength of the bullish and bearish pressure, okay? Right, so we can see with MACD, the bullish pressure is getting higher and higher. Just let me show you guys what I'm talking about. If we get a trend line and we kind of measure, you can see how bullish pressure on the MACD is increasing. okay, which is not a good sign for our analysis. Why? Because we're calling for a sell, but MACD is telling us that there is a lot of bullish pressure, right? So MACD is not agreeing with our analysis right now. Okay, on top of that, MACD is also saying that the bearish pressure is getting lesser and lesser and lesser, right? You can see that it was very bearish at this current point of time, which is the same as the charts, okay? And then bearish pressure just decreases, just has been decreasing, right? So, I mean, we're not playing a very big move. We're only playing one short little move down. The whole point is to hope that price has enough bearish momentum to even push price all the way down. If there's no bearish momentum or bearish strength, it's going to be very hard for price to even get to take profit. Okay, so Stochastics is agreeing with us. MACD is not agreeing with us. Ichimoku is not agreeing with us because price is above the cloud and the blue line is above the red line. Okay, so what can I say about this trade? I do think there's a possibility price might go down from this area, right? I do think price might go down for this area, but the confidence level for this, because two indicators are not agreeing with us, right? MACD is not agreeing with us. Ichimoku is not agreeing with the analysis. Because there's two that are not agreeing with the analysis, it makes me not that confident with this trade, and it makes me not possibly not want to get in on this trade, or even if you do want to get in a trade, get in on a very, very small lot size. Take a very small risk on this trade, okay? Possible, but we have to move away for a better opportunity. That's true. Okay, let's do this. Let's go on to the next chart. Do you guys have any other chart you want me to look at? If not, I'm just gonna go to a very generic one, which is gold. Right, gold is a very, okay, gold is just moving sideways. Right, gold is just moving sideways. So not, probably not much to analyze with gold. Okay, let me see if I can get anything with gold. I totally agree with you, Baptist. If it's not probable, we need to move on. We shouldn't waste too much time looking at something not probable, right? Okay, but for the sake of today's webinar, because today's webinar is trading strategy clinic, I do need to show you guys how I usually analyze charts. But it is sad because sometimes you can analyze charts. You can spend quite a bit of time looking at a chart, analyzing it, and then by the end of the day, it's not even probable, and you're not even going to take it. But that's just trading, right? That's like, you have to go through these charts to look for setups, right? Okay, so let's see. I might see a channel. There is a possible channel here. Let's look for support resistance. Okay, because I'm already on the 4 hours, I'm just gonna analyze the 4 hours and then move down to the 1 hour. Okay, so it's moving in a channel, not the best channel, because these two touches are very close together and it's very not that significant. So although I do think it is a channel, I don't think it's a very strong one. Okay, but one thing I do think is strong for sure is the ascending trend line. The ascending trend line is definitely strong. Right, so now we're gonna move down to the 1 hour to see if the information we've collected on the 4 hours is even going to help us. Okay, so let's look at the 1 hour and try to find a setup, hopefully. Okay, so I do see a support here, and I do see a resistance here. Let's see if we can possibly get in for a buy entry. Ideally, what I want to see is price coming to this area, like this area here where the horizontal level lines up nicely with the ascending channel. And then we can consider getting in for a buy here to here. Okay, that's just my general biasness and general analysis at this current point of time, not even looking at other things, but just at this current point of time, that's just my very general analysis. Okay, so let's try to look for Fibonacci levels to see if anything lines up with our support level. Probably gonna be a 50% or 61. Okay, let's just change this to first support so you guys know what I'm talking about. And this to first resistance so you guys know what I'm talking about. Okay, we've got 61.8 lining up there, which is a good sign already. Right? Let's see if we can get anything else lining up there. Okay, we've got another 61.8 Fibonacci projection level lining up there, which is another good sign, right? Okay, let me see if this is a Nike tick in this area. Okay, it is. Okay, good news is there is confluence here. Okay, that means when price does get here, it's going to have quite a hard time breaking this area. Okay, it's going to have a hard time breaking this area. Hopefully it comes here, kind of hovers a little. So by around this area where everything lines up nicely, the ascending channel is lining up, the 3 Fibonacci levels are lining up, the horizontal support is lining up, and from here around this area, you can expect to see a buy from here. Okay, that's just my very general analysis. Okay, that's just a very general analysis for now. Okay, why am I putting this here? Why do I even find other support and resistance? It's because support and resistance works as my take profit and my stop loss. There's 2 ways to find stop loss. One is you put it below the next zone. Okay, the next zone is the next support and resistance. There's a support here. So usually I'll put my stop loss just below the support. Okay, the other way is to find Fibonacci levels. Okay, find Fibonacci levels and see if there's confluence and you can get in there for your stop loss. You can use that as your stop loss. So use this 138.2 and see if anything lines up. Okay, not really. 161.8. Okay, we're gonna use there's 2 ways you can put your stop loss. One is below the swing low here, or the other one is below the next Fibonacci level. So I'm gonna use the 78.6 Fibonacci retracement level as the next possible stop loss. Okay, why am I using here? Because I think this is good enough already. Like you can go even lower if you want, right? But this is good enough. The tighter your stop loss is, the bigger the lot size you can go anyways, right? So we want to find a stop loss that isn't too far away, right? So that we can use a bigger lot size to get in, okay, based on risk to reward. Head and shoulder. Okay, hey Baptiste, yes, I do see this head and shoulder too. This is the head and shoulder you're talking about, right? Right, okay, but the problem with this head and shoulder is that usually when we see head and shoulder, right, we usually expect a break to the upside. So let me just show you guys. Okay, so let's say it's an inverse head and shoulder pattern. Right, usually when there's an inverse head and shoulder, you can see that there will be a break to the upside and then it just continues in that direction. But when we look back at this chart, there was a break, right? There was a break here, but it seems like it was a fake out. It broke and it came back down. So this head and shoulder may not be the best to use because it didn't work out very nicely. Usually after head and shoulder, it just goes to that direction that it breaks out to. But in this case, it broke out and came back in, right? So this head and shoulder, yes, I see it, but it may not be, we shouldn't let it decide too much on our trade because it seems like it was a fake out and it seems like it didn't work out very nicely. Okay, that's why I did see that head and shoulder, but I saw the fake out as well, so that's why I didn't use it. But yes, nice catch on the head and shoulder. Okay, so back to this, I'm a bit more biased that it is a buy because of the ascending channel. Okay, it's an ascending channel. There's Fibonacci confluence here. You can put your stop loss here. Why I think this is an okay stop loss is because for price to even reach your stop loss, it would need to go beyond the channel to even touch your stop loss, right? Okay, take note there's possibility of wicking as well, okay? It's possible that price may come here, wick, hit your stop loss and go back up, right? There's a possibility, but I think the possibility is slim, okay? Especially if we do think that this channel is a legitimate channel, okay? So that's one thing. Okay, that's one thing to take note of. Okay, now let's back up our analysis with indicators to see if everything is working good. MACD, okay? Hopefully the indicators agree with us. If they don't agree with us, then that means we weren't able to find a probable trade today. Okay, stochastics isn't saying a lot, to be honest. Stochastics is not saying a lot. Let me see. Yeah, stochastics not saying a lot. We're not going to use stochastics. Okay, if anything, it might even be a divergence. Okay, but let's not think too much into stochastics because it's not saying a lot. RSI isn't saying a lot either. If anything, RSI is saying that it's on a downtrend. Okay, no, it's not saying anything. Okay, one thing good about give me a moment. Okay, one thing about MACD that is good right now is that it's saying there's not much momentum in terms of bearishness, okay? So it kind of looks like the bullishness is weakening as well, right? We can see that the bullish pressure is weakening, and we can also see that the bearish pressure has just been kind of like stagnant. So my guess is that price is going to continue moving sideways, which is totally fine, because if price really does move sideways, it will probably move sideways and hit our take profit, okay? Hit our take profit. So MACD is just telling us that price is kind of neutral, going to be quite neutral soon, which is a good thing. It's actually a good thing. It's not, I mean, it's not a good thing, but it's not bad, right? It's not going against our analysis. Okay, let's see. Gold. Okay, let me see. Ichimoku isn't saying much, right? Ichimoku isn't saying much because markets is moving sideways. So Ichimoku does not work well with sideways market. Okay, so we're not going to use Ichimoku because it's not giving us relevant information. So right now, other than MACD not going against us, the only thing about this trade is, like, you see, when I'm looking for trade, it could have been a throwback, but it was too much for Mr. Yep. It could be. Okay, so you see, like, I'm not sure if I shared this with you guys already, right? Because I do take you guys every week. But me, myself, as a trader, I try to take at least one trade a day if I see it. Okay, so my aim every day is to take a 1% trade. That means I'm risking 1% to make at least 1%. So I'm doing a 1-to-1 trade and above. Okay, so it can be 1-to-3, it can be 1-to-4, but I'm only risking 1 at all times, right? Okay, so if I have $100,000 account, I'm only risking $1,000. But if I win either 1,000, 3,000, 4,000, 10,000. It depends on my risk to reward. Okay, so if we are taking this trade, let's see the risk to reward to this trade. Long position. So let's say we get in a trade at the best entry. The reverse to reward for this trade is 1-to-2. Okay, it's about 1-to-2. That means I risk 1,000 to make 2,000. So every day on a daily basis, I will try to take one of these trades that will risk 1% to either make 1-to-1 and above, right? Okay, so because I'm taking so little trades, right? I only plan to take one. If I see more good setups, then yes, of course I'll take more. But if I don't see any, I will try to at least aim to take one good one. I will try to look out for one very good one for the day. Okay, so usually because I'm taking so little trades, usually when I do take the trades, I make sure that everything lines up perfectly. I make sure like I will go through chart after chart after chart after chart after chart to find out if I can find the best setups. Okay, so in this case for XAU USD, although I think horizontal levels are great, okay, it's moving on a channel, it's moving in an ascending trend line. Okay, it looks like it's moving sideways. Moving sideways is okay because now we're at that bottom of the resistance, the support, and means that we can go back up to that sideways move, right? Okay, but the only problem right now with this trade is that there's no indicators backing me up. Okay, so I would much prefer it if everything was perfect and also indicators are also agreeing with my analysis. So for the 4 indicators that I usually use, which is Ichimoku, MACD, Stochastics, and RSI, none of them was agreeing with my analysis. And I can totally understand why. It's because markets is moving sideways, right? So it's a bit hard for indicators, certain indicators to kind of give you accurate information on sideways market. So right now, although this is an okay trade to take, I would much prefer if the indicators was agreeing to the analysis. But in this case, because it's not, my confidence of this trade immediately becomes like 65%, maybe. If the indicators was agreeing with me, it'll be closer to 80%, right? I'll be like 80% confident that price is going to go up from here to here. Okay, but right now, because no indicators that I usually use are agreeing with me, immediately I'm only like, okay, I think there's a 65% chance of winning this trade. Okay, so if you guys, do I still want to take this kind of trade, a 65% chance? You can consider taking this trade, okay, if you really want to, but maybe don't, like usually for me, I go 1%. Every trade I take 1%. Maybe if I were to take this trade, maybe I'll go 0.3%, right? That means if I have $100,000 account, I'm only risking $300 rather than risking $1,000, okay? Because only when I'm very confident, then I take 1% trade. But now because I'm not so confident in this trade, it's like, it's a good trade, but no indicators are supporting me, then I will take less, okay? Is everyone good for now? Is everyone okay with how we find setups? All right. Okay. Yeah, that's all I have for you guys today. Thanks for attending our webinar. I'm so sorry about the technical difficulties in the beginning, like with the echo and the voice. I think next week onwards, I'm just gonna totally use a different computer. But yes, hopefully you guys understood what I was trying to share today. I will see you guys next Thursday, okay? So thank you so much. Thank you, Jacob. Thank you, Baptist. Who else is it? Thank you, Russell. Thank you, Venom. Thank you, Joash, Sarah, Zara, and Muhammad. Okay, bye guys. Thanks so much for joining.